Relentless asset management, baby. Relentless asset management, baby. Come on, man. Look, good morning, good evening, good afternoon. Good morning, good evening, good afternoon. We are out here. Just got back from work, probably about 20 minutes ago or so. We're going to go ahead and review some of these fundamentals, maybe even bang out an article. We'll run through the technicals, higher time frame, lower time frame, mark out some potential trade ideas for the upcoming session and the rest of the day. And we'll go from there. So, as of right now, coming up into the New York session on the 3rd, actually, it'll be the 4th once it gets there. But Wednesday, we got our ISM manufacturing PMI, we have our job openings data, and we also have FOMC meeting minutes to find out. And this is at 11 a.m. my time. My time? Yeah, my time. So I'll be at work at the time of the meeting, but make sure I'm calling it right now. Make sure tomorrow, you feel me? Specifically tomorrow after work, the analysis session should consist of this FOMC meeting minutes breakdown just to see, hey, what they say, what are we looking at, what's their monetary policy projection, looks, feelings for the upcoming Fed funds rate, and that's obviously going to be a driving factor for the currency of the U.S. dollar and gold as a byproduct. So the projection for the ISM manufacturing PMI coming up in New York session is looking like it will be a decrease, and that could potentially, if that does come out true, let's say equal or less than that, you could see some bearish U.S. dollar vibes come New York session. If it comes out greater, obviously, you could see some bullish um, action there. Joe's job openings, again, they're looking at a smaller number for their job opening and labor turnover survey. Looking at they're forecasting a smaller number, so that could be priced in with a little bit of bearish US dollar, FOMC meeting minutes if they're going to, speak about lowering those interest rates from the 100s to the 50, I mean my fault, 100s to the 75s to the 50s. Now if they're talking about 25 basis point rate hike, and just keeping rates high but not necessarily raising them fast or extreme or volatile, like it'll make a lot of sense. And at that point you can also get some bearish US dollar temporarily. And we'll actually just stop there, knowing what's coming in there. And so what I'm honestly already seeing is this Asian and this London session could potentially be setups and price in bullish movement early, right? For the week, a high was already made, right? That high can easily be retested again before coming back or before continuing, you know? So on the weekly time frame, real quick, based off of just because that was just economic data, and we will also read an article, but we read an article already yesterday. Actually, we read a couple articles yesterday to determine what the overall outlook for the US dollar and gold and things like that in the economy is looking like. And some of the main information that we received was up here. Hopefully, I have both. Oh, Lord. Where is the technicals? It's all good. Hold on. No. Pause. Okay. Technicals over there. All right. But some of those fundamentals in play. Interest rate cycle easing. We have Fed, FOMC meeting minutes going to pretty much confirm that. I think we have CPI coming up next week for our actual trading week. So I really actually want to see that. Let's see if CPI is here. Let's go more. CPI. Okay, the only reason why I came to this was because I wanted to see what they were forecasting now, but it's not up yet, and that's fine. But shit, that was the previous 7.1. So if they're like, hey, nigga, now it's 6.9, or they're forecasting 6.9, shit, that could be pretty damn good. That could be pretty damn good. And what it'll do is give reason for them to slow the fuck down on them interest rates and then give bearish action to the US dollar. But all right, let's bang out these technicals again real quick. So basically what I have marked out here, and I'll just kind of talk it out instead of having to force myself to draw it out. First line, first line we have right here at 18, we'll just call it 1850. We have a resistance which was pretty much yesterday's high and the current weekly high at 1850. Great. Now, this other line we have here is the previous week's high, and I also believe on a lower time frame, let's go from the weekly to the 4 hour. I also believe that it just so happens to be the most recent 4 hour support as well. So not only again is it the previous week's high, but it is this current week's 4 hour low order block. Order block. This is not a direct, this is a temporary barcode. This is not a direction. This was a direction. This is not a direction. Now you could take buys here and sells here, and you could wait for this level to also break and take buys above with the support. Wait for this level to break and take sells below at a resistance to continue down. Very simple. Very, very, very simple. Back to the weekly. There's a minor level on the lower time frame. So we'll actually have to get to some of these levels, but just so you can see these lines from the higher time frame, understanding that there's a lot of pips in between these levels. And these are pretty much my higher time frame levels. You know, this week's current high to potentially clear candlestick range, 300 pips to another level higher, right? Also, current 4 hour support, pretty sure this is a minor level as well. And we got about 150, 160 pips to that level at the break of this, and then so on and so forth, right? Let's go ahead and go down here to the daily to see what we got going on. Where the daily made a low, the daily made a low. Here, let's make this big. Come here. We'll look at the overall for a second just to see. Beautiful triple bottom. Amazing impulse move up. Exhaustion. Support created. Push up. Support try to be retested. Resistance broken. Obviously, plenty of price action in here. Resistance finally broken. Target the high. The high was reached. Not only that, a new high was created. And all we're going to do is pretty much explain a bullish uptrend. Nice. So at this point, obviously, it took a while to break this level, but once it finally did, you know what I'm saying, we're coming above here. Now we are above here. Boom, boom, boom. And this is just pretty much 3 days straight of goddamn bulls. And yeah, I mean, obviously, bears might have to come in at some point, but where would they come in at? You think they'll come in down here? No, not the big bears. I'm talking about big bears. You feel me? When and where would the big bears come up? They would always come up somewhere around here or higher. Or if it did break, that means they probably were already in. But if it did break and it came back up to the same levels that already broke, then they'll get in again. So on the daily time frame, let's just look at these candlesticks right here, right? Where yesterday's candlestick, we already know, had no bottom wick, pushed to the upside, and left a range to be traded. What the? I know you saw that. Hold on. Sleep mode just came up or something. I gotta go to display. What is this? Bluetooth and devices, accessibility, personalization. It gotta be that. Uh, Hold on, because it might already be up here. Background, image, color, slideshow, colors, accent, transparency, effects, color theme. Let's see what the fuck these niggas talking about. I need to go to like display settings or something. Let's see. Change the resolution of the display. Change the sound bubble. Rearrange multiple apps. Detect older displays. Change when the screen is turned off. Change when the screen turn on. Choose when to turn off the screen. Change it. This motherfucker went to night mode. Damn, that shit hella bright. God damn, hold up. Fuck it, let's just go to night mode then. Jesus. Alright. Uh yeah, bro, this shit created a whole range. Now I'm honestly gonna have to just throw some here because bro, I gotta throw it. Cause then above this level, above this motherfucker is a wick fill, a daily wick fill. Guarantee you. Let me see. I can't even see this shit. Daily wick daily wick fill for 95 to 100. Catch that shit at the low. That's pretty wild. Let's see what that daily potential daily wick fill looks like on the 4 hour, just to make sure we're not like, mmm, wow. I'm gonna mark that and label it. Daily wick filling ton, the professional. And I love it because it's bullish, turn bearish, motherfucking resistance. Yeah, that's nice. That's nice, man. Because then you come back up here. Let me actually go right here. Yeah. Yeah, that's good. I like that. Daily wick. So, if, bro, just know, I'm gonna move this over. Just know this candlestick, this daily candlestick, I'm gonna put it on the stream. Oops. Oh wait, no, that is what I want. I'm gonna put it on the stream right now. All right, I'm putting it on the stream right now. It's going on stream, bro. Right fucking now, bro. That's honestly disrespectful. Go like this, just like that, bang. And then I'm gonna make that whole green bang. Lime green bang. Yeah, I made it squiggly. Just know, final, like, look, I'm putting this here now because it's literally Asian session. Okay, it's obviously Asian session, but I'm on the daily time frame. Just put it here. I'm on the daily time frame, and as of right now, the daily has made no top wick, has went and made a low currently right here, and has the potential to continue up to this resistance that it made, break it, and for the day in total, have something that finishes out like this. Now, obviously, the day could be much larger than just 100 pips, and there would probably be a lot of order blocks in this 100 pip range if it took all damn day to do 100. But this is something that, could play out. It's something about this confidently flipping back, going bullish, and completing that range to the high. All right. Now I'm gonna delete that. Actually, let's motherfucking let's screenshot that. Let's screenshot and add that. Especially because fundamentally we're looking at shit. We're looking at a little bit of a bearish U.S. dollar. It's not dollar domination right now. A potential, you feel me, bearish dollar and a bullish gold. And this is what we about to do with it. This is what we about to do with it. Nigga, say that shit. I like that. I'm gonna keep it 100 because that's just one idea. Um, I'm gonna just delete this because I have it on the stream. I have a screenshot. Now, honestly, that's really just what I can see from the daily time frame. It would have to show me something. It would. I really believe there should potentially be a top wake form of some degree. If there's not, all you gotta do is just show me some sort of structure that you're just continuing to break lows. And if you break, you know what I'm saying, if you're breaking lows, it's all good, bro. So here, let's go to the 4 hour. I'm getting text message. Uh, let's go crazy. So you already know this is daily Wick Fillington vibes. Already marked that off. That's what that is. Now, I love to see because this is a whole 4 hour order block, but to trade the order block effectively, like, oh, what's happening? If it does go up to test the top, like I said, daily Wick Fillington. Now, I'm not seeing anything. I understand this candlestick and the wick fill that it could do. I really do. I really do. But all it's doing is coming into here. Now, I know that's probably a decent amount of pips. You know, I'm on the 4 hour time frame. It breaks its own low and comes just simply to the low. We're talking 32. If it fills the wick, we're talking 86. Now, obviously, that's a lot of weight, right? But the close is here. So I feel like there's still a high potential for some type of price action to occur here. Um, the support is just so overt. It's just so objective. Like everybody sees the support. You know what I mean? Everybody sees the support. And this candlestick is high key. The wick is longer than the body, which does show high potential of exhaustion signs. You know what I mean? It really does. Now, it's hard to say that due to the fact that, this candlestick was very full with decent wicks on either side, right? Yeah, fuck it. Fuck it. Fuck it. I think from this 4 hour time frame, just to really have a decent analysis, also just to continue for the day, let's go all the way left. Let's look this way. You could say we have a minor, and because that hole could really keep going up past the level that it made yesterday. So if it did want to do that, I feel like we're rocking with something around there. Might as well, right? Might as well, right? Mm-hmm. Mm-hmm. So obviously it could come to this level and of course break this level. Of course, right? Let's just go ahead and make it big. Right? So not only can we get daily Wick Fillington for the day, matter of fact, that's what we're gonna do. Fuck it, right? I just love getting artistic out here. Bang, right? Daily wick Fillington above there. And this is just continued buys as the fundamental bias as of right now. Every article we're reading, and we're going to read another one, is buys. So we kind of got daily wick Fillington to do this move. This is just continuation moves, just field day shit. Now we're talking like thick ass pips. And then obviously, of course, the shit can. This whole pointing element got me fucked up. Mm. And then, of course, if it does want to come there, it can go there. And then, you know what I'm saying? I mean, shit. It can even do some shit here. I see that hoe, though. You can't play me. Because I feel like it could literally come here, not feel it. But see, this is where the value of still a Wickfield comes. Me and Lonnie Lon, me and Godbody Lonnie understand that at least 60% of the wick can be filled. This is a 110 pip wick. If 50 of it was filled, it would hit the level. 60 of it honestly makes sense. For 75, create a level, and then you'll have pretty much another like 30. You know what I'm saying? You'll have this 30 pip range, and then past that range, you got oodle manoodles. So I don't want to get too, because I understand, look, it went up, went higher, whatever, and came down, went down, created a support. So at the end of the day, created support. This retest right here, obviously it broke it, but it didn't break and continue, so it kept it intact. So this support is still intact. This just so happens to be a clearer range break of mm, potentially break of these wicks. You have those, but we're not really looking for those super 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 minute moves. I'm really looking for the real directional moves. So daily wick Fillington, you feel me, and pretty much 4 hour. Yeah, that's it. You got daily wick Fillington. I feel like they should all have names. You feel me? Daily wick Fillington is one for buys. You have call this bitch 4 hour OB break. Sound like motherfucking OBJ, huh? Order block break, right? Then you got motherfucking continuation buys. Fundamentally induced. Mm-hmm. And I feel like this sells. So like this ain't nothing more. This ain't nothing more than a 4 hour order block break to do that. This is daily wick Fillington. This is continuation buys. More than likely fundamentally induced by the news coming in the morning time. And then this move right here just might be like I'll call that one respective previous day high. And that's it. That's it, my boy. And then we're gonna read. I'm gonna save this, and then we're gonna read one article, one or two, and then I gotta go. I gotta get to the gym. I gotta get to the gym. I might need a peanut jelly sandwich before I go in that motherfucker. You see the roadmap. So now that we have the roadmap, technically, We understand what's coming from an economic data standpoint the following day, knowing that New York session will have ISM manufacturing PMI, JOLTS job openings, which is job openings and labor 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 something in S. I just want to kind of remember these things like JOLTS, job openings and labor turnover survey, job openings and labor turnover survey, job openings and labor turnover survey. Got it, got it. ISM PMI, the Institute of Supply Management, and then you got Purchasing Managers Index. Mm, mm, mm. So valuable. It ain't red for no reason. All right, so we know what's coming that day. This is looking kind of bearish. This is looking kind of like the forecast is bearish. The forecast is bearish. The forecast on this one is pretty dovish. You know what I'm saying? So you got these paired up again fundamentals going yay yay. We're gonna go right to gold. Hold on, commodities. Gold. We're gonna look at the motherfucking news. See what type of conversations we have in this space off of yesterday's movements. Gold steadies ahead of Fed minutes, period. I'm reading that. Hold on. Gold near 7 month peak as recession warnings empower safe havens. Huh. I think I want to read that one because we read that one. So since then, we had some about stocks, Dow Jones, U.S. stocks turn lower, and then gold. So I want this one. Let's see. Let's see. Gold near 7 month peak. Nice. As recession warnings empower safe havens. Bro, gold buys. As long as the structure is still intact. Oh, that's so 4 hour. I mean, look, bro. As long as the structure is truthfully still intact. As long as when this motherfucker breaks, if this motherfucker breaks, then yeah, shit is. You know what I'm saying. But until then, it's definitely buys at this level for sure until otherwise. Buys for this level until otherwise. Above here buys. You know what I'm saying? So every time it's coming down, we're hitting buy. And then if there's a potential that if it does come down here and create a motherfucking resistance, we can continue that down to retest this area. But as long as this level is not broken, this bullish structure is still intact, even on the 4 hour time frame. You know what I'm saying? Where's that arrow at? Bring Yas over here. First of all, I'm deleting Yas. Third of all, second of all, I'm throwing this arrow up, bro. Cause it's up as long as this mother. If this motherfucker's broken, then it's like, oh, okay. Then it's no longer. You know what I'm saying? Then you got boom, boom. You know what I'm saying? Just random. You know what I'm saying? Just regular shit. Break. You already know. Come back up for a second. Gotta retest. Come back. You feel me? One more time. Think we about to double bottom? Nah, we need good bottom buys at this level. That's exactly how that shit's about to happen. If it I ain't gonna lie to you, bro. If this level's broken, that's probably exactly what that would look like. Not only the push phase to the support exhaustion, come back, break it a little bit, come back, retest that same level. Why not? Come down, retest this level, bounce off it, got to, right? And then make a little high, break the low, bang, and then straight up take that power from these buy levels right here. That's an analysis right there. Made this whole thing. Look, from exactly where it came. It started the year, mind you. It started the year, bro, like in this range, and did this shit. It literally did this shit to start the year. Why not make the peak or something like it, right? Retrace this whole shit. Look, retrace this whole shit for like 600. Get way. You know what? Next week we might be getting shit like this. Bow. And then bow. Yeah, it's ill. It's ill, man. Damn, I'm mad. I gotta delete all these motherfuckers. I know there's a faster way to delete them, but I don't know shit looking all the same. Let's finish this out. Moreover, risk taker. The safe haven trade is here. Okay. What that nigga say? He said, moreover, risk taker. Move over, my move over, risk taker. The safe haven trade is here. The new year has brought along new ominous warnings of recession that have sent gold to near 7 month peaks of above 1850 an ounce. Oh, it's definitely going back there. That's a fact. Gold futures benchmark February contract on New York's COMEX uh, settled at blah blah blah. The session peaked at 56, was the highest for COMEX gold since June 17th, marking a 6.5 month high. Beautiful. Um, the spot price of gold, which is more closely followed, blah blah blah, was at 39 an ounce by this time, up 1550. Boom boom boom. Spot gold intraday was 1850, pretty much on the dot. Also the highest since June 17th. Gold rallied after the International Monetary Fund said the world's three main growth centers, the United States, Europe, and China, were all experiencing weaker activity as 2023 began. I get a little something on my high. Began raising the stakes for a global economic slowdown. Oh yeah, 10 gold up. Gold is rallying strongly and gathering momentum, said Craig R.A.M, analyst at online trading platform Oanda. This could be a year in which global growth slows significantly, and traders are questioning whether that will warrant monetary policy to be loosened later in 2023. Central banks have pushed back strongly against the idea, and I imagine the IMF would too at this point, but we could see markets moving in that direction if the data doesn't continue to haunt us. One more time on that. This could be a year in which global growth slows significantly, and traders are questioning whether that will warrant monetary policy to be loosened later in 2023, which would make a lot of sense because you might have to speed it up and you're going to have to relax on the monetary policy for a moment. But everybody's going to be like, but inflation, we can't do it yet because inflation. All right, cool. Central banks have pushed back strongly against the idea of, and the idea of loosening the monetary policy. They're like, I don't know, man. We got to handle inflation, bro. And that makes sense. So, in China, particularly, manufacturing activity shrank for a fifth straight month in December. A private survey. Who's Kate? Hold on, bro. Should just be popping. Um, I gotta go. Let me finish this article, then I gotta go for real. Said, but in China, particularly, December, a private survey showed on Tuesday as the country grappled with an unprecedented spike in coronavirus cases after it relaxed some restrictions intended to prevent the spread of the virus. The figures provide a snapshot of the challenges faced by Chinese manufacturers who now have to contend with surging infections after the country's abrupt COVID policy U turn in early December. President Xi Jinping. Xi Jinping. I'm kidding. I'm kidding. President Xi Jinping recently said that China's economy grew 4.4% in 2022, a figure much higher than markets anticipated. But he also noted that the country faces increased headwind from the COVID 19 pandemic in the coming months. In the United States, this week's greater focus will be on Friday's U.S. non farm payroll report for December. Very nice, very nice, very nice. The jobs report is the first top tier release of 2023 before next week's more important CPI. Wow. So understand this. This paragraph right here saying in the United States, this week's greater focus will be on Friday's U.S. non farm payrolls report for December. The jobs report, which is economic health stipulated. The jobs report is the first top tier release of 2023 before next week's more important consumer price index report. Okay, nice. Which is interest rates and inflation correlated. You know what I'm saying? Because obviously it's directly correlated to inflation. And if we can get a lower CPI reading, I feel like that would give some sort of confidence to potentially relax a little bit so we don't go so far down. But we'll see. The jobs report is critical as the Federal Reserve faces a dilemma on whether to keep up with monetary tightening to get inflation to its preferred level or let up on aggressive rate hikes to shield the economy from a slowdown. Now, let's be honest here. If I Now I know that it's not about me being, in the house or on the chair, I'm saying, part of the group that makes these decisions. But if it was me, respectfully, I think I strongly reside on the side of continuing to keep up with monetary tightening, literally to get inflation to its preferred level. Because if we don't get it to its preferred level, at some point in time, no matter what, the economy will have to experience some sort of slowdown. So it's either more of an aggressive slowdown for a shorter period of time, in my opinion, for a shorter period of time, but for that time it was very tight, very aggressive. You know what I'm saying? We're combating right now. And there's no reason to really shield the economy from a slowdown due to the fact that a slowdown is already imminent anyway. You know what I mean? Like there's no way to really prevent the slowdown. It's either we're either gonna slow down, kind of like damn near almost to a fucking complete stop. You know what I'm saying? We're gonna slow down damn near either to a complete stop, and that's gonna hurt people very aggressively, so we can get this motor back running again smoothly, or we're gonna try to keep chugging along and pushing ourselves too far and have to come to some sort of slowdown halt anyway. So it will be interesting to see what they choose to do. Because again, what it says is the jobs report is critical as the Federal Reserve faces a dilemma, and the dilemma is on whether to keep up with the monetary tightening to get inflation to its preferred level, or let up on aggressive rate hikes to shield the economy from a slowdown. Now, I think the slowdown is imminent regardless, so it will be very interesting to see what they choose. If they choose to keep tightening inflation, I agree with that decision because, again, it's imminent anyway. So we can just keep tightening to combat inflation just a little bit longer, maybe even for the first 3 to 6 months of 2023. Maybe get that number down from like 7.1 to maybe even, 6.1. That would be, I mean, it's some headway. You know what I'm saying? Bring it down so people, even though inflation's high and we're not able to fucking purchase loans and, you know what I'm saying, like go get stuff, or we are, but it just costs more. So it's kind of frowned upon. But let's just say since it's frowned upon, people are doing less of it. That's okay. That's okay because the regular fucking consumer is able to afford their goods and services a little bit easier for a period of time. And that's the funny thing. It's like who's really having the harder time here? I don't even know. It's like, nigga, when the consumer's having a better time, the government's having a terrible time. When the government's having a fucking field day, the consumer's fucked. It's just crazy, and the majority of the world is consumer, you know. So it's just interesting to see that the powers that be don't consider, or they do, but they don't. They make it so overt that we do not care about the consumer. It is always about the producer. The producer comes first. If the producer is doing good, we are doing good. If the producer is doing bad, we are doing bad, even though it's almost like they're flip flopped. You feel me? So I love it, man. I can't wait to see. Higher inflation and rising interest rates have hit the housing sector. Again, higher inflation and rising interest rates have hit the housing sector. And connects hit the labor market, which has shown stupendous growth for the past 2 years since the world came off the worst of pandemic. On the other hand, 8 non-farm payroll reports have exceeded economist estimates. So another positive surprise cannot be ruled out. Very interesting. Economists expect an increase of 200,000 jobs. That's a lot. Which would be lower. Oh, okay, never mind. Than the 263,000 reported for November, but still healthy by United States labor market standards. That's true. Before the pandemic, American jobs grew by just under 200,000 a month. Wow, every month? What the heck? In order to see salary growth cooling, the labor market would need to expand at a pace of under 100,000 or even suffer job losses. What? See, you hear this shit? Let's read that again. In order to see salary growth cooling. So you don't want motherfuckers making more money? That's interesting. In order to see salary growth cooling, the labor market would need to expand at a pace of under 100,000 or even suffer job losses, said Yo Hey. That's crazy. In such an in such an as expected scenario, markets would wobble and the US dollar could gain some ground in response to certainty about the Fed's next moves. Hmm. The greenback attracts safe haven flows. It does. However, many investors would likely keep their powder dry ahead of next week's all important CPI report. And that makes sense, man. That makes sense, man. It does. Gold's rally on Tuesday came despite a rebound in the dollar, further underscoring the further underscoring the relative strength of the yellow metal. All eyes are both gold and the dollar now as traders try to figure out the Fed's rate hikes for this year. The central bank is widely expected to raise rates by 25 basis points when it meets in February. Amid increasing signs that the US inflation has peaked, last year the Fed raised rates by 425 basis points in all. One more time, let's take a peek at this chart again just to make sure we say this out loud. 4 hour time frame, right? Matter of fact, fuck that. Weekly time frame for a moment. I don't want to see nothing, right? I'm gonna have to draw on it. It's all gonna come back, but forget about it. I'm not gonna draw on it. Let's just imagine here. Let's just say, right? Let's just say, perhaps, possibly, that the Fed goes with my plan of what I said. I'm kind of, yeah, it's all gonna come back. It's all gonna fucking come back. What should I do? I don't know. Let's just talk about it like this. Let's just spread it out real nice and see if we can make some sense of this. Let's go to the monthly. Let's see what the monthly got for us. Bro, delete that shit, bro. All right, I'm gonna need everybody in here to use their imagination. And I know I'm the only one in here, but I speak to the multitude when I speak every time. So check. Let's just say the feds take my kind of approach to the monetary policy by saying, you know what, for the first 6 months, I'm on the monthly. For the first 6 months, why don't we just kind of keep the rates coming? Even if it's like a 25 here and a 25 there, let's keep them coming. And then let's throw in a 50. Let's throw in a 50. Let's bring it back down to 25. So in 6 months, we throw a 25 and 25, that's 50. We throw a 50 and a 50, that's 150. You feel me? And then we got 2 more months. Shit, we all in all we throw a 75, so that would be about 225. We increased the rates by 225 basis points in the first 6 months of 2023, and we can see price go from obviously it's bullish, 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 but we could easily see a small kind of maybe even a whoop wop, whatever, but a little downtrend. You know what I'm saying? A little downtrend. I think what happens is in that aspect, price is able to come down to a more even favorable. Even what I notice about the market is these motherfuckers love to get in at crazy extreme prices. Like, come on, bro. Imagine getting in on the sale for the last 1, 2, 3, 4, 5, 6, 7, 8 months, 8 months, and catching that whole move, or even being the cause of the whole move. So you knew it was gonna go to the extremes first, the most favorable level, and then go, which makes that a favorable target and a favorable entry. Now, if the Fed goes with my thinking of, hey, fuck it, first 6 months, let's just keep raising them. We're never, ever, 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 ever gonna decrease them, and we're never, ever, 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 ever gonna not raise them. So let's just imagine gold just takes a temporary, couple, shit. I'm thinking at least 3 or 4 motherfucking bearish candles, right? And then as the Fed starts to not necessarily pivot, whatever, but be like, okay, like we got the inflation down a little bit, and we know the economy slowed down because we kept increasing interest rates, but prices have gone down. Consumers have been able to save a little bit more money on their normal shopping. Cool. Now let's go ahead and start expanding. You know what I mean? Expanding. And at that point, we're going to weaken our dollar. So let's say, the US dollar is like, no, we're going to keep raising our rates. You know what I'm saying? We're going to keep raising our rates for the first 6 months. Cool. So now US dollar is doing this, gold is doing this. Cool. Now, then they turn it around and US dollars up here, right? They turn it around, they're like, yeah, we're cool. And we start coming down. We're going to start taking those down. And then gold starts going up. But what happened was gold went down first. Like, bro, imagine it could hit these lows again. Like, what could be the cause of gold hitting fucking 1600s again? That would make me personally so happy. If nigga that shit came down to the 1600s and went from 1600 to fucking 2000, oh, that would make me so happy. It really would. It really would. But it is what it is. It is what it is. On the weekly time frame, 4 hour time frame, I'm on a 4 hour time frame. These that oh wait, whoa, hold up, nigga. Okay, this is that's what? Not even that. This down here, the 1600 area. Damn, that's hella far, nigga. Look at this. Look, it said, huh, bro. Look how high it is. Imagine that shit started working and came down and then back up. It's crazy. Now, if it didn't want to do what I said in terms of like keeping them, you know what I'm saying, just keep them coming. If it didn't want to do that, then yeah, bro, we just gonna see the fucking structure keep going. So yeah, we cool, we cool. Let's go ahead and get to this gym. Come on back. I don't know about you, but I enjoy